thank you specifically for punting Momentum Investments. So good afternoon, ladies and gentlemen. I'd like to spend a bit of time just giving you some insights into the corporate business, which includes the traditional EB business, Guard, Risk, Health, and Momentum Investments. The traditional EB business has not fared as well as we would have liked it to over the last couple of years, and certainly not according to its potential. So in May last year, we made some changes to the leadership and really got back to basics theme and targeted very key initiatives that we wanted to turn around quite quickly. The business has a very long tradition of a diverse product suite and lots of innovation, but I'm not convinced that we get client service and client experience right. In addition to that, we've had some particular challenges in the large corporate distribution channel that we needed to address. We also needed to focus on quality of new business as opposed to just volumes. And then probably most importantly in the short term was to fix earnings and specifically our underwriting results. In the health business, we needed to do some work to bring together 5 different health businesses into one single integrated entity and to move the business strategically from a predominantly transactional focused business into creating real health outcomes for our clients. And then in Momentum Investments, as Elias pointed out, the business has made significant progress. We now have one investments team, one culture, one investment philosophy, and you'll see later in the slides the performance is impressive. If we look at the journey of the corporate business over the last couple of years, 4 or 5 years ago, we got 90% of our business through intermediaries. So on the one hand, it gives you an opportunity to partner with them, but one of the challenges is that it's very difficult to actually roll out your whole value proposition to your client, because often they'll compete with you or they drive down margin. And I think over the last couple of years, we've seen that. Where we are now is we strengthen some of our distribution channels. We definitely have more engagement initiatives with clients where we get in touch with them. And we've improved our product margins. And by 2020, we would want to be the preferred business solutions partner for our clients, focusing on financial wellness of individuals and corporates. By then, our distribution channels will also be substantially more diversified. We'll have more direct access to clients. And through the use of Multiply, we can add value to individuals and corporates. Similar to Hilly, if we use client centricity as one of the strategic pillars for MMI, and if we look at the corporate business, to really improve client experience, you need a fundamental change in our culture. We are proud, we've got a proud history of lots of product innovation, but we really need to improve our client excellence and the way that clients interact with us and the ease with which they interact with us. If we get that right, we can roll out the likes of Multiply to individuals and corporates to add real value to clients. And we've recently launched Multiply for Corporates, which focuses on business financial wellness. Through our effective employer index, we regularly interact with large corporates now as well, and working with them to understand and improve on their productivity and provide solutions appropriately. And for those of you at the previous presentation, you'll recall that we highlighted our Workplace Living Services initiative, which is effectively a digital engagement tool with advice, where we are able to provide services to employees either on entry or exit of employment, where we can move them out of group arrangements and into an individualized solution based on their financial needs. These are just some of the initiatives that we're embarking on to make sure that we get closer to our clients from an engagement perspective, transform our business into more of a digital business, and ultimately enhance the lives of our clients. Momentum Investments has followed quite a journey. We have combined a number of businesses over a couple of years, and we now are the pioneers of outcomes-based investing in South Africa. Because of the different businesses we brought together, we've combined single and multi-manager strategies and active and passive management structures to create solutions where we can focus on clients' needs based on their investment risk profile as well as their investment horizon. And the performance, as I'll show you later, is exemplary. Our health business is now at full scale. We cover 2.5 million lives. In the past year, we've combined Metropolitan Health, Momentum Health, Oxa, Carecross, and Providence into one business, but management is focused on our specific target markets, which are retail, corporate, public sector, mining, and then appropriate support for health. As a key player in the industry, we play a vital role together with government and stakeholders to make sure that we create a sustainable healthcare industry for South Africa, for both the public and private sector. Our solutions include medical schemes, low-cost options, gap products, capitation contracts, and wellness solutions for clients. And because of our scale, we are now for the first time able to have real pricing power and also participate in more of the value chain. I'd like to touch on a couple of key growth initiatives, starting with Funds at Work, which is a flagship product in our corporate business, and which has driven a lot of growth in the business. As you can see here, our assets under management have grown by 19% a year over the last couple of years. As a backdrop, the investment markets have not done anywhere near that. We've also grown members by 5% a year, which may not seem a lot, but in the formal employment sector, we've actually seen no growth in the formal economy. We are the third largest provider in the industry, and coupled with our freestanding company, Momentum Retirement Administrators, we are the second largest and growing. Momentum and Retirement Administrators is probably also the only player in the market that makes money purely from administration. Our health business has consistently shown its ability to grow faster than the market and faster than our competitors. The health industry has grown by less than 1% a year for the past 5 years. But as you can see here, our growth is nearly 8% since 2010. Our low-cost option, Health for Me, has grown from 6,000 to 26,000 members over a period of 18 months. And I think that is testament to the value proposition, which I'll talk about a bit later, as well as our client experience and broker service. As I've indicated at the start of the presentation, earnings recovery was critical to us. You would have seen it in the results presentation this morning, or results release this morning, and Rista will touch on it just now. But each one of the major businesses in the corporate environment has had a turnaround in earnings. So starting with Guardrisk under Herman Skuman has had a very good 6 months, investments and annuities as well. The health business is starting to get traction. But by far, I think the biggest turnaround has been in our group insurance environment and our underwriting results. We are either number 1 or number 2 in the market in any of the product lines. So we haven't necessarily seen an improvement in claims experience over the past 6 months. But because of deliberate management action, we've significantly increased premiums on some of the big loss-making schemes, or we've terminated those schemes. The health business has also right-sized itself from an expense-based perspective so that we can grow off a relatively low expense base and increase earnings. And I think looking at the past 6 months, earnings was probably the easier one to fix than new business. We've indicated from the start that new business will take slightly longer as we've rebuilt our distribution channels. We've also launched Momentum Corporate Consultants and Actuaries, which is aimed at providing a range of advice to clients with the aim of getting closer to clients and providing MMI solutions to them as well. If you look at our new business and the value of new business at 40-odd million, it's probably not where we'd like it to be yet. But I think it's important to consider a couple of things. One, our expense base is not that flexible, so it's fairly stable from year to year. We've written lower volumes, deliberately so. One, in the group insurance environment, where the large schemes we just don't think we can write at the right margins for now, so we've steered away from that. And as I've indicated, in our larger corporate channel, we've had some challenges with the distribution environment, and so we haven't written any big annuity deals. In that context, we still ended up with value of new business, which is roughly similar to last year, which tells you that we're writing a better quality of business at better margins. We've also been successful in a number of new business appointments in the first quarter already. So by the end of March, our value of new business will look a lot better than last year's. In the health environment, both Momentum Health, Health for Me, and our India growth is also solid. If I may quickly brag a bit, by far the most impressive award we've received is that we were voted as the best health solutions product provider in the industry by independent intermediaries. And as you can imagine, we would have been up against one fairly large competitor. We've also had our credit rating of AA confirmed for the medical scheme, which talks to its financial strength. We then received a Gold Loeries Award, and we're the first financial services company in South Africa to receive a gold award for the work we did around digital client innovation. And more recently, we received a Batseto Award for financial literacy work we've done in the umbrella fund market. As Hilly has indicated, this is probably our best kept secret. So MMI has struggled with investment performance ever since the merger. Even prior to the merger, both Metropolitan Asset Management and RMB Asset Management at the time was starting to struggle. We now have a great investment team, one investment culture and philosophy. And as you can see from this slide, which just compares two of our flagship products to some of our peers, the performance is very credible over a 10-year period and also over shorter periods of time. More importantly, though, we don't measure ourselves relative to our competitors, but more in terms of the outcomes that we've promised to our clients. So in summary, we've deliberately targeted a couple of very key items that we wanted to make significant improvement on. And as you can see, I think the earnings recovery is excellent. We've improved underwriting results. Our distribution channels are not where we'd like to have them yet, but they are certainly stronger. The quality of new business is better, and our investment performance is solid. And then our health business has also been repositioned, both from an expense-based perspective, but also with strong empowerment partners looking ahead. Looking ahead then, what you should expect from us in the next year is more of the same, focus on a couple of key strategic issues. So I've spoken about the culture of client obsession that we really need to change and get closer to our clients, strengthen distribution even further. Our underwriting margins, although they have improved materially, are not yet at the long-term assumptions that I think we can actually get them to. So I think there's further room for improvement there. Then in the corporate business, we have 1.7 million customers and another 1.8 million in health. So that's 3.5 million clients to which we predominantly provide group-type solutions. So we have a number of initiatives underway to ensure that we can focus on the client's individual needs and provide individual solutions that MMI provides. Notwithstanding that, though, I think that our corporate business is probably the one in the industry that can provide the most diverse range of solutions available. So we'll continue to focus on both individual and business financial wellness through making sure that we have holistic solutions incorporating insurance, health, lending, and multiply. For the health business, as I've indicated, I think the market is fairly flat, so the opportunity to grow organically comes from taking business away from competitors, but we are keeping a keen eye on opportunities for inorganic growth and acquisitions. We'll continue to support health, which in India, which Rista will talk on just now around the prospects and the growth in the India environment, and then we need to bed down our 2BE transactions. Finally, for Momentum Investments, we spent the past year doing a lot of work working in both the retail and the corporate distribution channels to once again establish the brand and the presence and trust and to showcase the performance. Looking ahead, though, I think there are two big areas we need to tackle. The one is we don't yet have a big, strong enough consumer brand, so we'll be spending time and money to strengthen that. And then secondly, I think our our platform capability, especially the retail platform capability, needs to be significantly improved. So in conclusion, I think there's a lot more work to be done for the corporate business, but looking at the key focus areas that we've targeted over the past 6 months, I think we've made good progress. I'm now going to hand over to Risto to take us through the financial results.